Eric Muathe, Muathe.com, and we're taking a look at Tesla's chart, and we are beginning with the monthly chart here, today being June 23rd, 2016. What a nice run-up, as we can see, off the lows of late 2016, and very nice move to the upside. That's the monthly chart. As long as the monthly is trading above 69.1, expect a continued price action that is either sideways, shallow pullbacks, and nice continuation of this run, similar to something like this here. As long as the RSI is above 69.1, you can see chance for this type of a move. So if we take a look at the weekly, we can also see that as long as the RSI is trading above 69.1, you can expect this nice movement to continue. Shallow pullbacks, sideways market at worst, and a great continuation of this run at best. We take a look at the daily, and also as long as the daily is trading above 69.1, this should be a stable to bullish market. Now if we take a look at the hourly, we start seeing where the stock could run into problems. The first observation here is we made new highs, but these highs came with the RSI failing to make good technical action. An improvement to all-time highs there. Take a look at where the RSI went. RSI did not move above 61.8 on the hourly. Remember, on my hourly and 30-minute charts, I'm using RSI setting of 26. So this being the worst type of negative divergence, one can start looking for possibility of reversals from current levels. So as long as we're seeing this look where we made an improvement to new highs, but the technicals did not move above 61.8 on the hourly RSI, chances are this is starting to again point to the possibility of a pullback. Now keep in mind, we can also see that there is a reason why the RSI stalled where it did. What the stock was doing in essence was coming back to test a prior break line, so this level here of this warning high. Since then, that has been resistance. You can see here resistance of these shallow highs, and we didn't even get back to that line. So I would say as long as we are seeing this negative divergence and resistance below the red line, chances are on the hourly there's indication that this is starting to point down. In fact, if you take a look at the 30-minute chart, we can see again we made new highs intraday, but this came with the expense of the RSI making lower highs, and that negative divergence could eventually set the stage for a pullback. Don't forget, it also coincides nicely with where the RSI had broke down previously. So you have to go back to this break, recent trendline break here of this warning high, and since then it has been rejected every time it tried to move above that line. So we can see that as long as we are seeing negative divergence and resistance on this red line, here is when you can start picking up some position to the downside, anticipating the possibility of a move lower unless it clears recent highs. And right now, if we take a look at the all data monthly, we can see that the high, all-time intraday high, is at 386.99. Let's say 387, so you can set an alert. So right now it's trading with the intraday high 386.99. So you can go ahead and start building a position. You got about 4 points from the last price to the intraday high. So you can set your stop. Let's just say if it moves below above 3, let's call it, let's say 388. About 2 points maybe above that, or 1 point above the current intraday high is where you set your alert and start picking some position to the downside. Why? Because the hourly and the 30-minute chart are pointing to the possibility of a pullback. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. ECS. Woo! Oi.